Thank you, Mary. I understand about the heat. I was raised in the southern parts of the states, and living up here in Washington State, I really miss the heat and the sunshine. All right, well, welcome everybody to the second Q&A. Before I turn on the recording and such here, once again, can you hear my voice, and can you see the picture of me in front of the screen on your screen? So type a little Y into the chat there. If it looks like Jan's got the pencil. All right. Great. All right. Well, I am going to start the recording and start the session. Let's see. Yes. Oh, looks like I must have already started it because it's been going. So, great. Well, I want to welcome everybody to our second Q&A with Hawk Arps, and I want to hear. It's our way of trying to reach out to each of you and give you an opportunity to ask questions or find out some more information that you might know about some of the indicators that we use. And this one is designed to focus on the Radar2 Fear Greed, Radar1 Fear Greed indicator and the Radar2 Price Leader. Now, this presentation is probably going to last about an hour because I don't want to take any more of your time than that. And sense of the way it should go is I plan on showing my presentation for about 20 to 30 minutes, and then I'm going to open it up for questions for about 20 to 30 minutes, and then I have some tools, some of the things I want to show you today that I will put in a little box and you can take home with you if you would like. So I don't want to spend too much time here in the introduction, but I just wanted to kind of lay it out for you before we get started. Any questions before we get started? I also want to mention that I'm still a little new with this trading platform, this webinar platform, so if I'm a little clumsy with it, please just excuse me. Okay, so let's get started with talking about Radar1. And the way I want to do this is I'm going to myself bring up a chart, and let's see if I can show you a basic chart here. One moment, please. I have to switch to my other computer, and let's go with this. All right, so as soon as you can see the chart, please type a little yes into the I'm not seeing the chart yet. Here we go. Okay. Okay, can you see the chart now? All right, thank you. All right, so today I want to talk about Radar1 and Radar2. Now, what you're looking at here is a continuous gold contract, and I have applied the Radar1 Fear Greed indicator. Now, the Radar1 Fear Greed indicator is one of our best and most important tools for many reasons. In fact, it's one of our most award-winning tools along with the trender, and the reason, because it gives you a glimpse into the market that other tools can't give you, or at least they don't give you. What this tool is doing is it's showing you the buying strength and or the selling strength, the relative strength of the buyers and the sellers in the market. Just as a brief overview for those of you who don't know, the Fear Greed plots green and up and red and down to show selling strength, and the stronger the strength, the longer the bar. So what we see here when we look at this chart is in the chart you see a lot of selling, and you see the selling got a little weaker as the the price kept testing these lows. Finally, there's some buyers in. They took some quick profits, just tried one more time, and by the time we tested the lows again, the sellers were allowed. And then you can see the buyers are stepping in right here and starting to take over the market. And we took some profits here, and it looks like there was some profit taking or some selling here, and then the buyers have. So I'm reading this market the way you can read using the Radar1, and we can see now as the market went up, the buyers are getting weaker and weaker. We do see a little bit of sellers taking over right here. Reading this, what I see in this market is a weakening of the buyers. So this is gold. This is the current gold contract. I see a weakening of the buyers, and so I would expect this up move to come to an end sometime soon, and look for a retracement back down to the next support level. Now this is the basic use of Radar1, and since it's telling us the strength of the buyers and the sellers, it's very good at showing us when increasing or decreasing, even when the price doesn't show us that. And that's how we use Radar1. We look for increasing strength of sellers, and we look for divergences in the buyers and the sellers. So there are several ways that we do that. One, looking for divergences. Another way we do that is by setting alerts when previous buying or selling strength is broken. For instance, let's say we're down here and we're starting to see these divergences in Radar1. The sellers, we see the sellers getting weaker and weaker, and we say to ourselves, well, I want to know if the buyers get stronger than they ever were. So right there, the buyers are at 611. So let's say we can set our alert level at 611, and then it draws a line at that 611 mark. And as time is going on, when the buyers exceed that on this bar right here, then I know that this buying strength is actually for real. You can see right in here, buyers got stronger than they were back here. So that gives me that we're not only seeing weakening of sellers, but that we're able to start to look, confirm that the buyers are gaining strength. All right. Mike, are you having a sound problem here? Oh, okay. Well, let's see. Okay, let me answer some of these questions before going on. John asks, what is the time sequence of the chart? This is a 4,200 share, means that every bar represents 4,200 shares of the gold contract. And I prefer to use share and tick charts because it includes volume in the chart itself. You don't need to have the volume indicator, and it also makes every bar equally weighted in terms of how many shares were traded. So when you have those overnight bars, on 5-minute or 10-minute charts that there's no trading, those are insignificant bars to my indicators. So this is why I like to use tick charts and volume charts. John, I was just showing you how to set the alerts. You open up. This is a TradeStation. We have alerts in the other platforms too. Open up the properties and set the alert in the alerts level category, and it will give you a line and an alert at that level. Now, you can also set the alerts to negative numbers down here. Let's say you wanted to see if it got weaker than this. Let's say this one is what, negative 1009. I set my alert to negative 1009, and it would be tell me if the fear. Okay, Bjorn says my sound is all chopped up. Let me turn up the gain on my mic a little bit. Okay, let's test. Maybe my headset's getting old. Is that any better? Sounds okay for some, not so good for others. All right. Well, I'm gonna carry on, and if I keep having problems with the sound, let me know. Sound problem. Bjorn says there's a sound problem. Could be the internet bandwidth. That's true. Okay. One of the things I want to talk about in this webinar is not only how to use Radar1, but set it to your specific time charts. And as I said at the end, I'm going to open it up to questions. We can look at your own charts and try to help synchronize the tools to you. But as a general theory, the way we want to synchronize the tools is to give us the type of information that we want. So the main way we do that with the Radar1 is with the sensitivity setting. Here, I have it set at 7 for this chart, and if it generally ranges between 1 and 10, or 1 and 10. If we set it to a much lower level, you can see it gets really choppy. You don't want this with Radar1. This is what you don't want. Conversely, if you set it at too high of we set it at 10, then it doesn't give you crosses quite as early. It's a little bit slower in identifying the uptakes and the crosses of the zero line. So what you want to do is set it at a setting. Find a chart that you like. Find a trend that you like, especially the end of a trend or something, and set it so that the size of the bumps that it's showing is giving you the information that is most useful. I usually find a setting of 6 or 7, 5, 6, or 7 is a good general rule. You can see on this chart it works pretty well as price, let's say for instance, see up here at this top, it was able to identify a nice divergence there before price might have gone down for a little bit, kept going up. You can see, let's see, here at the bottom, we see, finally at the bottom of this chart, we see higher lows in the Radar1. So you take that you're looking at and you set the indicator to basically show you bumps that cross zero pretty soon after the top or the bottom, and that are indicative of the time frame of the information that you're looking at. All right, I'm glad that it sounds better now. Thank you, Mary. Let me just make sure that I'm doing better. Okay, so this is the basic use of Radar1. It's showing us the buying and the selling strength, and we use it primarily to identify divergences in the buying and selling. Now, there's another nice feature of Radar1 that some of you may or may not be familiar with, and it's a bounded feature. And what this means is if you want to look at the relative strength of Radar1 as opposed to the unbounded strength, it normalizes the Radar1 readings over a look-back period. In other words, let's say if I set this to true and I use an 89 bar period here, then it will put the fear greed, well, I have low. Hang on a minute. I don't want to use the alert. Set the alert at 0. We'll set the range from 50 to negative 50, and it's showing us the relative strength of Radar1 over the last 89 bars. So It's good to set the Radar1 look back fuse bounded to a number that's about what you can see on your screen. And one of the reasons I don't generally use bounded is because it doesn't show the divergences quite as well. It tops off at 50 and negative 50. But if you want to compare your readings to other instruments, or like a strong trend, you want to just see how it's looking relative to itself, then you can set that back to false. And let me ask if there's any questions about that. Any questions about the basic sensitivity settings and use bounded settings on Radar1? Everybody okay? All right. So let's look at a few other time frames and see how we would to match those. Now here's gold again. This is a 1680 share chart, which is one of the, and you can see the same thing that we before. Here we're in this rally up, and you can see that there was a lot more buying here early on, and up here at the top you can see the buying strength is getting really weak. Again, I would be looking for an opportunity to sell short here sometime soon. You can see this market came down. The sellers got a lot stronger here when this little pullback was out of. And then when it tests bottom, you can see how weak the sellers were right here. Now this is an interesting phenomenon right here. This is another one of the things we like to look for using the Radar1. And this is what I call a pullback divergence, where you see the price making lower highs, as it does here. And I'm going to make this easier to see, making it yellow. Price is making lower highs, but the Radar1 is making higher highs. So this is the pullback divergence, which is another good one, unlike this pivot divergence that you see down here where the price is making lower lows, but the oscillator is making higher lows. So these are the ways that we use Radar1. We use it to find divergences. We look for confirmation when the buyers actually get stronger than the sellers. That gives us an idea that it's okay to get into a position long or short. You saw me just make this little those little background colors disappear, and I want to talk about those in just John, I set the alert signal to 0 on this chart so they will nicely. So there's no alert on this one right now. So you can see now we have Radar1. Now I want to talk about, we talked about how to tune it. We talked a little bit. One of the other interesting ways that I use Radar1 is not only to look for previous highs and lows, but when you see these peaks and valleys, those are also indications of fear and greed. So what I might do if I were in a long position, I could set my alert line for, say, this valley right there, which I call a ghost valley. Look for a cross below that, which happened about here, as a signal to perhaps get out. Usually I wait until after I see the sellers have broken through. So I'm looking at this ghost valley right now, which is 140.31. I can set my alert at 140. No, we're already that. So right there on that bar would be a good exit signal had I been long in this gold contract right there. Any questions about the alert and tuning the Radar1 so far? Okay, now I want to show you one of the other cool little features that I've developed with this tool, and that is what I call a Radar1 paint bar gradient. I made a cool little tool. This is just kind of off the cuff, that paints bars given the strength of the Radar1. And it's a little thicker so that you can actually see it. You can see I've now got the bars showing how strong Radar1 is with each particular bar. And you might see this on some of the charts, some of my trading charts that I'm going to show you a little bit later. If you have any questions about what the colors are, that's this Radar1 paint bar gradient. So you can kind of see the state of Radar1 without even looking at the Radar1. Okay, now another one of the cool new features that I've been working with on Radar1 is what I call my Radar1 MACD. And what that is I've decided that if I wait for Radar1 to actually turn from red to green, sometimes the signals are later than I want them to be. I want some early warning. So what I did was I put a moving average on the Radar1. And so now I'm going to show the average, and I'm going to show the moving average right here. And when I do that, you're going to see, whoops, it's true. You're going to see some lines come up on the chart. Now here, this yellow line is the moving average of Radar1, which I usually don't show. But what I am looking for here now is what the difference is between the moving average and the actual value of Radar1, which gives me a sort of a MACD of Radar1, which is why I called Radar1 MACD. Now this is just an inside peek at some of the things that I'm developing now. This is not really out on the market yet, but I'm giving you guys a heads up. And what this does for me, it gives me an earlier warning when there's a change in the status. For instance, I can see right here that the sellers are starting to take over because the MACD is turned pink before the Radar1 itself turned red over here. Vice versa, I can see right sellers are starting to gain strength because the MACD turned blue before the actual Radar1 turned blue. Yes, Heinz, these are available for NinjaTrader. I'm going to show you some Ninja charts when we get into looking at your charts. But I just wanted to show you this one little feature. Now here we have the chart that I actually do my trading on. It's a 233 tick chart. I have the same paint bar gradient on there, and I have the Radar1. You can see the MACD Radar1 here. Now, notice that the setting on a little bit higher than 6 or 7. This is a 233 tick chart, which means the bars are coming, well, especially during the day, the bars are coming less than one every 5 minutes. And when you get to these higher, faster charts, I generally set the inputs a little bit higher. So my input here setting is at 11. That's for the gradient. For the Radar1, generally want to set moving average length to the sensitivity or lower in order to get the best reading. So you can see I have my Radar1 set 11 because it's a faster chart, and it's giving me the information that I want to see. For instance, this beautiful divergence again right here at the top today, giving me a sell signal. I wasn't actually trading this today. I was kind of busy getting ready for this presentation and doing some other things. But these are the ways that we use this. Now you can see once I see this divergence, then I'm going to start looking to get in, and my OK is D turns yellow down here. So if I get a Radar2 cross or my trend signals are OK, by the time I get right there, it's already OK for me to sell, rather than waiting a few bars for the Radar1 to turn red. So that preview of how to use Radar1. I want to move on quickly to Radar2. Are there any questions about Radar1 before I go on to Radar2? Anybody? Everybody doing okay? All right. Everybody still there? Type me a yes or something if you're still there. I'm kind of looking for some feedback here. Making sense to everybody? All right. We're going to go on to Radar 2 then. These questions and answers are for you guys. So I'm here to answer your questions if you have them. Let's go on to Radar 2. Switch over here to this other chart. Now we're looking at the same chart, gold 4200 share chart, and now I have Radar 2 applied to it. And a quick primer on Radar 2 for those of you not familiar. This is one of the most important tools on my chart. Now, no one tool by itself is going to make you an expert trader. To be successful at trading, what I've found is you need to be able to look at the markets from through several different windows. And that's what these indicators do. The radar was looking at market sentiment, and that's an important window for successful trading. Radar 2 is looking at market acceleration and deceleration. And a lot of people get market velocity and market acceleration confused. They're not the same thing. Radar 2 is showing us the second derivative of velocity. It's showing us not how fast is the market moving, how much is there a change on the speed of the market. And the way it tells us that is with this two-line oscillator. The fast line is the main line is the red line. It's a fast line, and it's centered on 0. So we see acceleration. It's above 0 and it's below 0, and we use this in a lot of different ways. We use the Radar 2 indicator is to identify changes in acceleration and deceleration. And those changes are identified by when the fast line crosses the slow line. So this is the tool I use to trigger entries and my exits. I use Radar1 to identify trading signals, but I will trigger all of my entries with Radar. So for instance, here when we see these divergences in Radar, this low down here, I would wait for Radar 2 to confirm my entry. And we call this tool the Price Leader because sometimes these confirmations come even before the price starts to move. You can see in this case, our entry could have been as early as that bar right there. So this is why we call the Radar 2 the Price Leader, and it's a very useful tool for timing entries and exits. It's also useful for identifying divergences in acceleration and deceleration. For instance, you can see, especially in the slow line, this nice divergence here. Again, like we had in Radar 1, we get pullback divergences on the way up here as well in the trend. Now, that's one of the main uses of Radar 2. Timing the entries with the fast-slow cross, looking for divergences like, say, let's see if I find a good one on this chart. Well, here's a good one right here. And I look for them in the fast and in the slow. We have it both in the fast and the slow right here. We see divergences where you make lower lows in the oscillator, but you're seeing higher lows in the price. So these are good entry opportunities that we look for, and we time that entry by looking for a cross of the fast, which would be that bar right there for a long entry. Now, there's another of Radar 2, and that is the overbought and oversold aspect of it. A few years ago, we added an overbought and oversold line to Radar 2, and show that to you. And this, unlike a lot of oscillators that have static overbought and oversold lines, ours is programmed to adjust to the market dynamically. So you can see it's kind of a wiggly line, and it gives us overbought and oversold indications, which, like a lot of other oscillators, are good indications for taking action in the market. For instance, oversold, beautiful pullback divergence here to get in long, crossing out of the oversold zone. Here you have an overbought exit if you were a shorter term trader, right? An exit up here. So we set these over and oversold lines using our indicator, and they're set to a look back. Right now I have the standard look back is set to 89, and the overbought and oversold sensitivity is generally somewhere between 4 and 10. Since this shows you how far away to make the lines from the oscillator. So if I set it to 10, you can see they get further away and we don't get as many signals. In fact, the only one I can see on this chart right now is a buy signal right there. On the other hand, if I set it closer, you can see that we'll get a lot more signals because it's, well, let's go even lower. Let's go to, it's closer to the oscillator. So a general setting is 9 and 5. If the look back is extended to a longer period, let's say 144, the lines will smooth out, not be quite as dynamic, not follow the price quite so dynamically. Whereas if you use a short look back, the overbought and oversold signals are going to come, the lines will be much more dynamic, a lot more closely. So you can use those how you want, and there's a lot of different ways to use those, but the basic setting is 89 and 5. So let me set that back to the basic setting. Now, John asks, how does this compare to a fast stochastic? Well, it's usually faster than the fast stochastic, and it doesn't. One of the other main advantages that it has over the stochastic is, as you can see, it doesn't stay in the overbought and oversold as often as the stochastic does. For instance, a stochastic oscillator would, throughout most of this move here, would be overbought. Whereas here you can see the swings a lot better using the Radar2 Price Leader. John's looking for some reference to get signals in eSignal. John, I'm not going to use any eSignal charts today because I only have so many charts set up for the webinar, but the settings should work the same for eSignal as they do for the other platforms. Now I want to talk a little tune your Radar2. The main sensitivity settings for Radar2 are the fast line and the slow line. And you can, on this chart, I have the fast line set at 6, and the slow is a proprietary moving average of the fast line. So we want to keep the fast line and the slow line close enough together to give you quick signals, but we don't want them so close that we get a lot of false crosses. For instance, if my slow line were 3 or something, you get a lot of false crosses. And you see this in the stochastic indicator too. You know, situations like this where it crosses and crosses back and forth. Again, right here, you don't really want that. You want to look for the trends that you want to stay in, but not get faked out with these little fast crosses here. So you want to keep your fast line just far enough over your slow line, and so we had 12 there. I'm gonna change this to 6 and change the slow line to 3, and we'll see what happens when we do that. Okay, see how wiggly the slow line gets? False crosses here, false crosses here, false crosses all over the place. So the way you want to set your Radar 2 for each chart is so that the fast line is squiggles. So we're going to go back to 6 here, trying to be far enough away that it doesn't get crossed with all of these little wiggles. So here I think I might slow the fast line and slow the slow line down a little bit more and see if I can get it just far away. We still got a little while ahead set, I believe, at 12. And so this is the way you can set your own indicators, is to set the fast line so that it's not quite so wiggly, and set the slow line so that it stays just that you do get. Like right there, you can see right here we got, you can't get rid of all of them because you don't know which ones are the false and not the false ones. But right here you can see it pulls back but doesn't quite cross. And so that's to tune the radar to. Time frames. Oops, got some. Here's a 20,000 share S&P, and it looks like it's set pretty well as far as the fast and slow. Let's look at something else. 600 tick. Okay. Yeah, here's an example. Okay, here is a let's go to this one. Here is a range bar of the S&P today. Let me turn off these accounts from my trading today. But you can actually, let's take a look at this for just a minute. Let's actually, before I turn that off, let's talk about timing. Now, I wasn't using a range bar. I was using my other charts. But you can see that, well, let's not even do that. Let's just turn those off. Okay, so here we have a range bar chart, and you can see I have not tuned the Radar2 to this chart yet. It's set at the stock 6 and 6, and the fast line is way too wiggly. So I'm going to slow down the fast line to about 12 and see what I get. This is how you might tune it yourself. Now, see, you got rid of all of those wiggles there. We're still pretty wiggly in here. A lot of false crosses there. I could slow down the slow line too and see if that gets away. But I found the fast line is still too wiggly. And what I found with Radar 2 is that once you get into these faster, these higher readings, you just can't get rid of the wiggles. So I created improvement to Radar 2, and I gave it a second, and that's what you see here on this new TT8. And this is kind of like a periodic chart in your chemistry lab. And there's all the different levels of the periodic chart, and each level represents which orb of the molecule the electrons are circulating in. Well, now we can go to orbs that are further out by putting the next 2 or 3 out there, and that will smooth out the Radar 2 considerably. Now you can see we left the other settings the same. All of those wiggles are gone, and this is especially useful on the really fast charts like these range bar charts. This is a chart. Let me turn off that again. Sorry about that. Tick charts, you can see I haven't set this one yet. It's way too wiggly. But I put the same setting later with a sensitivity setting of 2 for the new radar. And you can see how much smoother it got. So that's basically how to tune the Radar 2. Any questions right now about tuning Radar 2, the overbought, oversold lines, or the fast, slow lines on Radar 2? Let's look at this one. We're going to plot the overbought and oversold. This is the old Radar 2. It doesn't have the Swampo tuning. That's mostly for faster charts anyway. And we'll look at how the overbought and oversold lines look. Okay, that's the stock setting, and it looks pretty good. Now, the way that we use the Radar 2 is in several ways. As I mentioned, we look for a fast, slow cross. It's primarily a timing indicator for our trades. Like you can see right here, the fast, slow cross on this move up right there, what happened on this bar right there. And we also look for divergences in Radar2, like we got right here. So there's two good things. Another way we use it is we look for setups, these overbought and oversold setups. And we created a tool actually to show those setups on the chart, and that's the trend exhaustion one. And I'm going to show you that. I want to mention one other way of using. Actually, let's just go ahead and show trend exhaustion one. Let's get trend exhaustion one up there and turn it on. And you can see now it's giving us these signals where the indicator was overbought and oversold. So these, you know, some are good and some are bad. You don't want to trade against the trend, so some of these might be good exit signals. They might not be great buying, selling signals at the top. But I'm going to tell you how we filter out the good signals from the bad signals in just a minute. So this is trend exhaustion one, showing us these overbought and oversold signals. I want to mention one other way that we use this tool, and that's looking for these cool little wiggles like this right here. See this? This is what we call a lobster tail, where you see this little bump and a second little bump. When you see that, it usually means you're going to get a nice move in the direction of the cross. So in this case, the trend is up, and that's a nice opportunity to look for a move, to get back into the trend to the upside. I mentioned the little lobster tails. They usually indicate a move, an upcoming move. Let's see if there's any of those anymore on this chart. Well, not enough data on this chart. Here, these are lobster tails at the top here, but we don't have exit signals to correspond to that. Now, I wanted to mention to you how we filter out these overbought and oversold signals. Because a lot of people say, God, those trend exhaustion signals, I went short. Well, you're here, and of course you don't know it when you're there. You don't know what's going to happen, whether you're in the trend or not. So what we do to filter out the trend exhaustion one signal is we use the Arps trender or the Radar2 to filter the Radar1 trend exhaustion, the trend exhaustion one signal. So let me put the Radar2 on there. And the way I do it is one or the other to confirm the signal. So preferably both. And we talked about Radar2 last month. And there's Radar2 for those of you that don't remember. It's our trend strength index. So signals to be confirmed either by the trender. In this case, the green ones are confirmed here, and the red ones are not, or by the Radar2 trend strength index. So this is not confirmed by either. This one is not confirmed by, that's not a confirmed signal. This one is actually not a confirmed signal either. So this is and one other thing about using the trender. Generally, if you're using the trender, you set it to a longer term trender. If you're using your triple trender, I set it to the long term trender. Okay, any questions so far on using the Radar2 and tuning the Radar2? Anybody? JW, are you typing? Can you hear me? Am I talking to anybody? Give me some feedback. Hear me. Okay. John Turpin can hear me. All right, thank you. All right. You guys have any questions about Radar2? I'm going to show you some charts here. We looked at the difference between the new Radar2 and the old Radar2. So let's just look at a couple. Let's look at this chart here for this workspace. This is pretty much my regular workspace, and it's a lot of different charts, but it has the tools that we've talked about. Actually, let's go back. Let's go back to this one. Okay, here's the gold chart that we were looking at, and I want to show you how I use these tools on the different time frames. Now, first I start with a 40,000 share, and I've got support and resistance lines, which I don't really want to go into today, but you can see the buying and selling strength in the Radar1 on the 40,000 share chart. Here's the 42,000 share, 4,200 share we looked at earlier. And now we combine these with 1,680 share chart. And I want to show you a cool way that we use the Radar MACD addition to find a new trade setup. And I have that applied to this chart, so it's a little indicator I made. And I thought, once you get these MACD signals on the Radar1, like we were talking about here, wouldn't it be great if you could get a pullback indication when you have the MACD below, for instance, a bearish MACD below bullish fear greed, when you see it start to roll over back in the direction of pressure, get a signal right there. So I created this Radar1 pullback signal, which you can see on the chart here, which is identified when the MACD rolls over back in the direction of the fear greed. You can see we got a seller one there, but the fear greed wasn't very strong. So this is another way that we can use that. Here's another one right here. You can see the MACD starts rolling over in the direction of the trend, and it turned out to not be a great trade, but it is a pullback opportunity. You can see I have the paint gradient on there. Actually, this MACD thing is much better on the faster charts, and you can see here I've got it on a 233 tick chart, and just showing you that we have Radar2 tuned with the sensitivity setting, special sensitivity at 2 as opposed to 1. You can see how much smoother it is. So I'm going to get rid of that one and use the newer version of Radar2 on this faster chart. And you can see I have these pullback indications here in different places on the chart. So that's kind of how we use the tools. Here it is again. Today I was trading soy meal, and we saw a lot of these nice Radar1 pull soy meal. This was yesterday. Any questions? Yeah, we're going to go to some NinjaTrader charts currently. In fact, I'm going to turn it over to you guys because I'm not, I'm here to answer your NinjaTrader charts, and I have a few charts set up, and I'm going to turn it back over to myself over here and ask you guys to how I can help you out here. So let's just start off with this one here, and let me know when you can see the chart. Okay, Danny says, looks pretty interesting. If you get the tools, do they include training? Well, yes, Danny, I'm helping you now, and all of the toolkits come with a session with me to help you work with the tools. John says, how to set sensitivities when using multiple symbols. I'm not sure what you mean by using multiple symbols, John. What do you mean? You give it per chart. If you're using a spread symbol on each signal, you're going to set the sensitivities so that it works for the chart that you're looking at. In other words, you want to tune your Radar2, which I haven't got tuned here on this chart yet, to work the way you want it to. For instance, you can assume that if this was a spread symbol, I haven't tuned it yet. I've got my Radar2. I see it's a lot more wiggly than I want. So I can do two things. I can make the fast line slower. I can make the slow line slower and see how that looks. It's still a lot more wiggly than I want. So what I'm going to do is I'm going to use my special new special sensitivity setting. I'm going to set it to 3, and that smooths it right out for me. Now looking at the Radar1 Fear Greed, the way I is I start without the MACD, so I'm going to make the moving average 1, so that I'm just looking at Radar1. and I'm going to look and see, well, is this showing me kind of the right time frame for buying and selling pressure? And actually, I'd say yes, because I'm seeing nice divergences just before that turn. Nice divergences there. So I like that. So now I'm going to set my moving average to the same as my sensitivity. And now I've got my MACD. So if I'm looking at a sell opportunity here, I can get an okay to enter by the time I get, say, right in here. I'm seeing MACD already. Right there is my MACD short. I still have to wait for Radar2, so I might not get in until there. And that's one thing about setting Radar2 that slow. You might want to, if you use the sensitivity setting, you might not want to set those numbers quite so high. Okay, so that's better. That gets me in on that bar. All right. Flipping between multiple stocks. The main key, John, is that it's not so much between, I mean, different stocks have different volatilities, and if you're looking at one stock quite a bit, you might want to, and it's got an extreme volatility, you might want to change the settings. But if you're looking at specific time frames or such, and stocks are harder to use volume charts because they're all different volumes, so you do have to use case. You want the same settings for each time frame. For instance, you might use a different setting for a 5-minute chart than you do for a 120-minute chart, and a different setting maybe for a daily chart. But the stock settings should be good for pretty much anything 5 minutes or slower, and if you get make the charts a little bit faster. Okay, anybody have anything in particular they want to look at in terms of charts? You can see all of these overbought signals, triple trender, or by my trender here, and on my own trading Radar3 there too, which I'm sure would allow me to enter on these signals. Now these could signals, for instance, if you see a nice divergence like this one right here, or like this one right here, you know, all of, excuse me, I meant to draw that on the Radar1. If you start to see divergences that give you exit signals, well, right there is your exit signal. But this trend exhaustion would be a good warning that it's a good time to get out. It's just not necessarily time to get in. You want to look at Apple. What time frame would you like to see, John? A daily chart, or let's bring up a daily chart, or you want to see something, some other time frame? 30-minute. Okay, let's go to 30-minute. Let's go here, and I'll just go to. Again, I don't have all of our indicators here. I do use Radar3 in all of my trading and the triple trender too. Focusing today on the Radar2 and the Radar1. Let's go up to 30 minutes here, which are these two tools down here. Okay, while it's loading the 30-minute chart, is there anything else I can be bringing up while waiting for the 30-minute chart? You want to see this? JW wants to see the CL. Any particular time frame? I'm not sure what you mean by don't show the 1030 inventory report. Is there a time frame on the oil chart that you want to see there, JW? Okay. Well, let's see. I have a CL chart here of all different types of time frames. Here's a CL chart, the one that we were looking at earlier. I'm not sure what you mean by the 10. This is Western time here, so that's 7:30 report. It looks like that could have been prompted this big sell-off here that happened later in the day. Let's go see if we can 30-minute. Still loading apparently. So anything else that someone wants me to be bringing up while we're doing this? Okay, here's Apple 30-minute. Pretty broken up after down. Let's do this and see what happens. You can see here though that as the selling, as it was consolidating, this is one of my favorite ways of actually using this tool. You see this consolidation area, consolidation area right throughout pretty much here. You can see price is pretty much going sideways, but you can see the sellers are running out of steam, and the buyers actually get a little bit there. So I'm seeing the sellers running out of steam here, and the buyers we're seeing now is still pretty strong buying. And Radar2 is showing a little bit of deceleration right now, so there might be another move down, but the overall sentiment of the market appears to still be more bullish than bearish. Okay, I'm hearing reports that the audio has not been very good. We're going to try to send a link of this webinar to a recording that everybody can check, and hopefully the sound on that. Anything else anybody wants to look at before we give you all an opportunity to have access to these free improvements to these tools? Anything else you want to look at, or any questions you have about Radar1 or Radar2? Looks like we're losing some data here. I think bandwidth might be the problem. Okay, well, what I'm going to do then is stop sharing. And what I would like to do now is see, are you guys still with me? Please give me some yes or no. I'm getting some technical difficulties here. So let me know if you're still with me. Okay, good. Well, what I want to do then is put out a quick poll, and then I want to give you guys these modified Radar1 and Radar2 for you. But first, I need to know what kind of platforms you currently trade with. So if you don't mind taking this poll for us, we'll give you a few minutes. And while we're doing that, I want to offer my thanks for you guys being here. I hope that you're getting something out of it. We get a lot of emails all the time, people asking us how to use the tools, and do we have more access to Jan and I. So we're starting this question and answer series, and we hope that it's beneficial to you. So I'm going to just let you finish with this right now, and while we're doing that, I'm going to close that survey, and I'm going to ask you, has this been beneficial to you? So here, let me just ask you, was this presentation helpful? Looks like we're getting some yeses. I guess if it wasn't helpful, you probably wouldn't still be here. So, appreciate that. And then one other poll here. Hang on a minute. Let me see. I'm like I say, I'm let's see, I wanted to share the results of the previous poll. There you go. This was those of you that are in here. Looks like mostly NinjaTrader and TradeStation users. We got eSignal and multi-charts. Okay, so the other thing I'd like to do for you today, and this is something I've never done before. No, excuse me. And again, this webinar platform is new to me, so I want to see if I can do this. Is I want to give you guys access to the new versions of these tools, and I got to figure out how to do this. I've put them in the box that's in the shared files, and I want to make sure everyone has access to the shared files. So you might move, okay, here's how you do it. Oops, sorry about that. Okay, can you see the shared files folder on your screen now? You can see it in the shared files folder. I have whole files, the versions of Radar1 and Radar2, and we have multi-charts versions here for 32-bit, 64-bit, TradeStation versions here, and these are the Ninja versions here. So if you would like to avail yourself of those, the appropriate tool, if it's there for you, just click on it, and you'll see to the right it will probably say download file, and you can download it to your computer. And of course you have to be entitled to that, so if you don't own the tool at this time, it won't work for you. It's only going to work if you already own the tool. So I'm assuming everyone here already owns these tools, so I'm opening it up to you to download it. And if you're entitled to these tools currently, then you should be entitled to the new version of the tools. John asks, they're not in eSignal yet. I'm going to try to get them to eSignal in the next week or two. Jan and I are going to be at the Trading Expo in New York next week, so I'm not going to have a whole lot of time to program it into EFS. By the way, are any of you going to be in New York next week? Maybe we could meet up with you there and say hello. Losing something. What's happening? Nope. Well, if you are going to be in New York, we're not going to have a booth there this year, but we'll look for us. We'd love to say hello to you. Otherwise, Mr. John Capust, it'll probably be a couple of weeks before I have it available on eSignal. Any other questions about this, these two tools, or any other ways I can help you out here before terminating this webinar? Anything I can do for you? Heinz asked, will we send out the link for the recorded webinar? What we're going to do, this is my best guess, is that once we have access to the recording, we're going to upload it to a public Dropbox, and then we will invite you to that link to that Dropbox, and you'll be able to play it on your own computer from there. John, believe me, I won't forget. It's high on my list. Okay, any other questions? I'm sure glad you guys are all here. And is there anything else I can do for you here today before I close up this meeting? All right, then. I just want to say thank you for being here. Thank you for your time. Danny, if you don't own the software, you can go to our website and buy it. Or you can download the free Universal Swing tool, and you don't even have to buy that. You can kind of get an introduction to some of our software there. These are great tools. I can't imagine trading without them. In fact, as I was saying earlier, that trading is really difficult. It's not as easy as it looks. And you need some good windows to look at the market, through which to look at the market. And for me, identifying market sentiment for greed, the market trend with the Radar3 trend strength and the triple trender, and acceleration with the Radar2 price leader are some of the invaluable tools on all of my charts. So and even with those, you still have to develop the skills to learn how to integrate them. The website is www.janarps.com. So you can go there, and in fact, you can sign up for our blog if you want. Probably won't get a new one out for another week or two, but I really want to really want to say thank you for your time, and send us an email if you have any further questions. You're welcome, Robert. I'm glad you're here. JW, you're talking about the swing tool. The free version of the swing tool doesn't have the fib ratios, but if you want to buy the Universal Swing Tool Pro, it does include the Fibonacci ratios for the current swings. So just want to let you know that. We also have some nice fib extension and fib retracement tools in our catalog too, if you don't want to mess with the swing tool. All right. Thank you.